Hello and welcome to News Centre. I'm Parikshit Luthra. On the show today, we take a look at India's EV landscape. According to a World Economic Forum report, India has the world's largest fleet of 2- and 3-wheelers, and its transition to electric vehicles requires a financing of $285 billion. We're talking about 100% electrification in India. Government policies such as faster adoption and manufacturing of electric vehicles, or FAME, have supported the adoption of EVs, and sales have been rising steadily over the past few years. About 7.3 lakh vehicles have been incentivized under FAME 2. Incentives worth over 3,000 crores have been rolled out, and 6,800 crores of FAME outlay remains till March 2024. The question that we're asking today: can India's EV ecosystem continue without subsidies? And what is the average loss that EV companies are making per vehicle? To take this forward, I'm now joined by Akash Gupta, the CEO and co-founder of Zip Electric, Randhir Singh of Niti Aayog, Jasmeet Khurana of the World Economic Forum, and GR Arun Kumar, the Chief Financial Officer at Ola. Randhir Singh, if I could ask you now, we have been hearing a lot of debates on subsidies, that EV subsidies cannot continue forever. Even within government circles, there is a review on what to do after 2024. At the Niti Aayog, what is the view that is now developing on continuing continuing subsidies post March 2024?
See, Parikshit, first of all, we need to understand why subsidies were at the first place needed. So EV is a sunrise sector, and it needs to actually break the long-drawn ICE vehicle convincibility from the consumer. So, the consumers are already attuned to the ICE vehicles. Now, if we have to shift them to a newer technology, which is not as much prevalent, that's where the nudge is required, initial nudge is required, and that's where the demand incentive, the first launch was of the demand incentive, FAME 2 incentives were done. Once the FAME 2 incentives were done, then we learned last year by that time what are the requirements for this not to be picking up. So then we remodeled the FAME 2, and now it has picked up like anything. In fact, since last year till now, around 10x sales has increased. And the main impact we see on the biggest market, that is the two-wheelers, which is 76% of our market. Now, from the adoption, from the demand side, that is the putting the parity at the capex level, upfront cost. The shift has also happening towards the manufacturing side, and that is where the ACC PLI, Advanced Chemistry Cell PLI, which targets the battery part, that is overall part. If we see the vehicle is 100, then in vehicle, for the electric vehicle, 40 rupees goes with the battery. And that is where the manufacturing is required. Our total dependence right now on the import, on the lithium-ion battery side. So that is where the ACC PLI targets the manufacturing, indigenization. The next part is what about the rest of the parts of the EVs? That is where the auto PLI kicks in. So now the entire vehicle is covered from the the manufacturing side itself. So that the entire vehicle's cost in itself, when it is indigenized, will go lower. So in the first part, when the incentives were given, the customers are already sensitized, market is developed, market is nourished. Now it has reached to a stage wherein if the right vehicle at the right price is available, which will be done through these two payments, then definitely the market is going to pick up, and it will no longer need the support, the fiscal support at all. Anyways, there are at two levels the support was there. The federal level, we have the FAME policy, but states have also come out with their individual policies. More than 22 states have come out with their individual policies. And in addition to the fiscal, there are non-fiscal incentives also. So, in terms of whether the subsidy part for the demand side is required or not, after the manufacturing cost going down with the PLIs and also the manufacturing, the incentives at the state levels are also there. These coming together will lower the EV price lesser than the ICE counterparts. So no longer it is actually needed. This is what the factfulness is. Right? And
okay.
Anyway,
I would also like to ask you one more quick question. As far as the current outlay goes, we believe that 3,800 crores has been used to incentivize electric chargers in the country, electric vehicles in the country. By when could this remaining outlay of approximately 6,000 crores be exhausted?
So, the major chunk of the outlay goes towards the buses. And the world's biggest tender has just now completed. And another tender of 5,000 plus buses has also been released. And the bids are being asked. These things are going to be materialized from next year onwards. That is when the major chunk will go. So the tenders are already successful. It has already been awarded under the FAME 2. Even the charges has already been allocated. Now we will see that money getting actually expensed next year onwards. That big chunk will go. Nevertheless, in terms of the two-wheelers, already the pickup is very, very high. In fact, almost 40 to 50% has already been exhausted. And, the target of 1 million vehicles, I'm pretty sure that under FAME 2, this should take up by the end of 2023. And also the buses and other sectors will also pick up. So that is when the whole expense, it is targeted towards the March 2024. Much before that, it should be completed.
Right. Thank you very much, Mr. Randir Singh, for joining us with that important perspective. Now, let me take this to Arun Kumar of Ola, Akash Gupta of Zip Electric, and Jasmeet Khurana. Arun Kumar, Ola has now started seeing a pickup in its sales over the last few months. The Vahan registrations show 16,400 vehicles registered approximately in the month of November. Ola claims to have sold about 20,000 electric vehicles in the month of November. Could you do without the FAME subsidy?
Yeah, I think, see, the first big trend that all of us are looking at is that truly an inflection point has come in, and that's a real big picture here. And we've always been maintaining that this year is going to be the year when there's going to be a huge inflection. And if you look at the top 15 cities in this country, you're already at about 15-20% in terms of EV adoption. And the country average is about less than 5%. And we see this huge inflection coming very, very soon. Now, in terms of sales of the EV vehicle, now FAME or no FAME subsidy is a different issue, but the Indian customers, I think, have made a very, very clear choice, unreversible choice towards electric. And now what is required is really the right quality of products with the right safety and at the right price points. So which is why, just like other OEM, we had announced a very interesting product, which is S1 Air, which is coming up at a 80,000 rupees price range in March, which is bang in the middle of 70% of the two-wheeler scooter market in terms of pricing. So quality products like that with other really good OEMs coming up with their products is what will drive the conversion. Now, as far as cost is concerned, and your question linking it to FAME, see, where the industry is working, the industry is constantly evolving, right? What do we do? What do other good OEMs do in the sector? Is that they work on their technology, they work on scale. And a company like ours, as you're aware, is backward integrating into cell manufacture as well. And we are the sort of the biggest awardees of the PLI ACC scheme by the Government of India, which we are very, very thankful to. And these steps followed by continuous value engineering, which is a game in any product, and the auto industry is very well known for that in the last 3 decades, though EV is a slightly different flavor. The technology has a different flavor here in terms of electronics, in terms of the motor train, and in terms of the battery pack itself versus a typical ICE engine. All of us are working towards our own cost efficiency. So we believe, as the other gentleman rightly put, come 2024, the ICE age would have ended, the EV adoption is true. There will be many products, including in motorcycles, which don't have products today. And companies like ourselves would have figured out the right cost structures to do business in a very profitable manner. And we'll probably be thanking the Government of India for the strong foundations that they've laid. And now the responsibility shifts to companies and technology to deliver. So customers will continue buying. Yes, incentives cannot be there in the long run. And we will absolutely get there when, the FAME dies its natural death in a couple of years or 5-6 quarters from now. I hope that answered your question.
Okay. All right. So you're saying that you will be ready with the right cost structure once the FAME subsidies come to an end in March 2024. Arun, if I may also ask you, have you seen a slowdown in FAME disbursements? We're hearing that there is greater scrutiny now at the level of the DHI, and disbursal of subsidies is taking time, sometimes even 2 months.
Well, I think the government should do whatever work it has to do for clearing claims. That's a very normal process. And if unfortunately a few players were under scrutiny, and so be it. So we are quite comfortable with the current process that the government has adopted. And I think the larger picture is what is important from a government point of view, because if you do a global comparison today with the PLI manufacturing, PLI ACC, and the customer subsidy FAME, there's no better place than India for an EV revolution. And that's exactly what we're seeing. At the end of Ice Age, we're absolutely
right.
That this is here to stay.
Right. Let me get in Akash Gupta of Zip Electric. Akash, you have been working with many EV manufacturers in the country, like Hero Electric as well. Give us a sense of the cost right now, the mathematics of it all. Many of the electric vehicle manufacturers, many of the startups are yet to break even. From your sense, what is the kind of loss per vehicle that EV companies, EV startups are making right now, Akash?
Sure, Parikshit. Thanks for having me. See, I think my point is that an EV revolution has just begun. We've started seeing that happen over the last, I would say, 12 months, when all of these players have started supplying larger numbers. It's like the seed was sown, obviously, by the government with FAME incentive and subsidies. And that seed has now started seeing a sapling to come out. Now, here, what we are trying to say is that while the sapling starts growing and it now starts throwing some flowers, we are trying to pluck them, right? I think I'd be a little wary of doing that so early, which is about 2023 or 24. I would say that let it grow into a little largish tree, right? Because businesses are very few. I think while we have deployed 10,000 EVs in the market, but that's a small number, right? We are talking about 15 million two-wheelers which get sold in our country every year. We are talking about China, which is the largest EV user today. They have about 25% of their overall sales now, which is electric, and still their incentives are continued. They're changed, they're tweaked in a certain way. They're not demand-led incentives, but possibly usage-led incentives. And I think those are things that government should think and come out. It's not to kind of kill the plant today, but kind of continue to seed it, because we are fighting versus oil, we are fighting versus pollution, we are fighting versus climate change. And hence, businesses like ours will definitely
so Akash,
thrive more.
In your perspective,
please.
Right. Akash, in your perspective, till when do we need subsidies?
I would say till the time we don't at least hit 20% of the overall sales to go electric. That's a fair assumption. While some of the governments have done it to about 50%, maybe if we hit a 20-25%, I think that should be a decent number. And if we achieve that by 24, then so be it.
All right. So at least till we achieve 20% of electric vehicle sales, and subsidies should continue till then. Jasmeet Khurana, you've come out with an exhaustive report on India's EV ecosystem. Yes, there is impressive growth. If you look at the numbers right now, almost 181% growth in electric vehicle registration in India over 2021. But when it comes to 100% electrification, can India's EV story continue without subsidies?
Right. So I think the subsidy point has already been touched upon. I think we can see subsidies continuing at least till 2024. And I would assume, there would be a requirement for subsidies to continue beyond 2024 as well. As, my colleague was saying that other markets as well will have subsidies, and, India will need to be at par with other markets in that sense. So what we are saying as part of this report is that there are 250 million two-wheelers, mostly combustion engine vehicles on the road today. And if we really need to, decarbonize all of that and move towards electric, we need to start first to, get to 100% electrification of new sales. And, then the stock turnover takes place. So for that to happen, we need to move fast, and we need to be ambitious. So in that way, incentives need to continue, whether it's capital subsidy or other forms of subsidy, including on manufacturing. And India has one of the highest subsidies. Like my colleague from Ola was also mentioning, we have the FAME subsidy. We have lower GST for electric two-wheelers, which is 5% as compared to 18%. We have PLI on vehicle manufacturing, on component manufacturing, on battery manufacturing. So there are lots of incentives, and one can't complain today about incentives. And states also have their own incentives. So we can't complain about incentives today. If anything, they're in excess of what might be the situation in other countries. But we can't also take them away in one go, right? So there needs to be a roadmap of how these incentives will play out, so that corporates can make their investment decisions accordingly. I think the uncertainty is what the problem would be, but if we can get a longer term roadmap of how these incentives will be phased out, I think that is what the industry would welcome.
All right, that's an important point, that if you even want to end subsidies or restructure them in some way or the other, do give a roadmap to the industry, because uncertainty is not good for business. We're going to take a short break, but we'll request all our guests to stay with us. We'll be right back on this important discussion. Welcome back. We're in conversation with Akash Gupta, the CEO and co-founder of Zip Electric, Randhir Singh of Niti Aayog, Jasmeet Khurana of the World Economic Forum, and GR Arun Kumar, the Chief Financial Officer at Ola. Arun Kumar, at the same time, I'd like to ask you, the EV startups that we have in the country, they're yet to break even. Tell us about the manufacturing cost per vehicle. What is the kind of loss that you're facing per vehicle at the moment?
Yeah, I think, Parikshit, these are not numbers one would discuss on TV, if at all, right? But if I had to give a general flavor of what it is that will drive scale and economy, it's like a path that we have chosen. We've set up the Future Factory at Tamil Nadu, and we are manufacturing to scale. So when you do scale level manufacturing with the right level of automation, especially on areas like the battery line and the paint shop, and you do a lot of components in-house like we do, the motor or the MCU, then you start seeing a lot of cost synergies out there. So the manufacturing expenses per vehicle, I would say, will be soon very, very comparable to any other ICE player in the automobile industry, with the kind of scale and the backward integration and the technology and the lines that we've invested in. So that be out of the way. The focus would completely be on value engineering and designing efficient two-wheeler or four-wheeler platforms that can deliver. For example, the work we are doing on software today for the two-wheeler is going to be similar, or this work extends into the four-wheeler. So it's like spending more in advance for a future economic model. So it's a very integrated way of running a business that I would say would lead to the profitability model. And obviously, when there is a startup in the first few quarters or first year, or for some companies, unfortunately, the first few years, they might take to achieve profitability. But the bottom line for us is, I think we would be profitable very, very soon.
Okay. By when do you expect to break even? When do you expect to become profitable? In how many months? Within a year? Or what would be the timeline, Arun?
I don't think it would be appropriate to comment on specific timelines here, but I would say it's imminent is what we should look at, because more important than the numbers is what is the strategy that you're putting in place. And it's all of what I mentioned to you, which is
right.
Scale, engineering, and technology.
Right. Let me get in Akash once again. Akash, what about Zip Electric? This is a question that we've asked other startups as well in the EV space. It's going to take some time for them to break even. What about you?
It's about business models, Parikshit, and I think we have spent a lot of time over the last 5 years. You would be happy to hear that for the last 6 months, Zip Electric as a business is profitable, right? So we've been running a business very cautiously. We are EBITDA profitable. we focused our energies into some key markets, and hence that has emerged out well. And now our idea is, but then again, while we are profitable, the goalpost is for us to capture the country, right? We've captured 2 markets. We want to capture at least 15 to 20 cities over the next 2 years, and that obviously will need more capital. So we'll keep investing more and more. We want to expand. It's just 10,000. It has to be 100,000. It has to be millions of units that we deploy and electrify last mile for masses, including delivery and commute. And that's the vision that we see. So yeah, till the time it's not mission zero emission, we would continue to invest.
All right, Jasmeet, to bring my last set of questions to you, there are a lot of thoughts within the government as to focusing subsidies on commercial vehicles. There is a feeling that 3-wheelers have already reached an inflection point, 2-wheelers may not need it. Would it be the right approach to focus, if we continue with the subsidies, focus only on commercial vehicles, buses, public transport in the next phase?
I think what we're seeing in the market today is, of course, like everyone has mentioned, that the penetrations are increasing and we need to keep up the momentum. What you would see in Delhi, for example, is that the penetrations went up to around 15% and they have stagnated, right? So we need to keep pushing forward. We can't, let our foot off the accelerator. In terms of subsidies for other segments, including private vehicles, if that is the question, I think that's a call for the government to make. But in our report, as part of our Moving India initiative, what we've said is that, the deliveries, e-commerce, and this is where, it makes a lot of sense to do electric today. And we need to get financing to driver cum owners for this to really scale up. And some of the fleets which are operating now, they need continuous capital. Private equity, of course, has been unlocked, and a lot of deals keep happening on the private equity side, but banks are still not lending, especially to fleets. And that market still needs to be de-risked. And a part of de-risking is the upfront cost, which needs to be supported by incentives. But other elements to it include, banks not measuring fleets in the same yardstick as they do, private vehicles or, ICE vehicles. So, that's a shift that, we are asking for as part of this report that we have published, where fleets need to be prioritized and, they need to be de-risked. Data which is now available for, all sorts of parameters within a vehicle as well as within a fleet, that needs to be leveraged for financing to flow in and, for real picture to emerge. And, the main part or the crux of it is that there is a new technology which has come in, which is the battery. We don't know the resale cost of it. We don't know, a lot of things are still unknown. And, that all still needs to be de-risked for, both consumers to get more confident with EVs, as well as for banks and, financial institutions to get more comfortable with EVs. And we've presented in this report that we've published several solutions on how we can do that. And data and, using data in a way which, maintains privacy is a key component of that.
Okay, thank you very much, Jasmeet, for joining us. GR, Arun Kumar, Randhir Singh, Akash Gupta for joining us here on News Center, giving us your sense on the electric vehicle roadmap and whether it can continue without subsidies. With that, it's a wrap on this edition of News Center. Thank you for watching. Goodbye.